Hello everybody, welcome back. So, I'm not having my video in the corner because it's early and you don't want to see this. I've been up for hours because it's my youngest daughter's second birthday today, and I think I've got conjunctivitis in my right eye. So there's no need for me to display all of that in a little corner of the screen. Absolutely no need for you to see that. It's just it'll put you off your breakfast basically if you saw what state I'm in this morning. But it's not quite as bad as Bitcoin, I have to say. Well, to be fair with you, Bitcoin is it's doing its thing now. It's coming down. It's broken down below that major area of support, which is about 40,000-ish area. So now we're into not uncharted territory, but basically because there was not a great deal in this zone until we either come down to this trend line or the CME gap. It's basically coming straight down. It's not all Bitcoin's fault though, I have to say. If you look at the Nasdaq, this is the Nasdaq's largest composite history. We can see that we also broke down. This is just a daily candle. We also broke down from its major area of support as well. So it's not just Bitcoin. All kinds of markets are doing the same thing. We just think about the move we did yesterday, and I know this is a Nasdaq, so don't expect everything to be extreme as Bitcoin. Bitcoin obviously is like an amplifier of traditional markets at the moment. There was a 2.85% drop in a single day, and we've already been until that major area of support broke 12%. So now we're talking on the Nasdaq a correction of 15%. So it's not just Bitcoin. The world is correcting. And if you think Bitcoin had a bad day, just check. You need to have a look at Netflix. Netflix is wrecked. Netflix went down about 25% in 2 days. So I suppose that's about the same as Bitcoin, isn't it, really? So let's be fair. But it's not just Bitcoin. The world is suffering. And do you know why? It's because of the bloody tapering. The interest rates are likely to increase. And all this, that and the other that's affecting the entire world economy. But the reason they're doing that is to stop us starving to death through inflation. It is better to go through this than to deal with the inevitable problems which would be coming out of an enormous hyperinflated currency. Let's face it, currencies inflate all the time anyway. All we need to do is look at the Dixie. We recognise that, we know that, and same with the pound, the euro as well, massively the euro in fact. And even though the dollar doesn't, the Dixie doesn't necessarily mean that the dollar is going up in value. It means that out of all world currencies, it's I wouldn't even say it's performing the best. It's going down the least at the moment. That's basically what the Dixie is. It's all these currencies combined, and we get to see who's better or who's worse, basically. And I think largely the euro plays a major role in the Dixie, which is probably why it looks so bullish. I mean, the pound is holding up pretty well, to be fair. But all of them, if you were to look at all currencies in their inflations, year after year after year, they basically end up looking like this. This is the nature of them. You're going to print more money. You have to print more money. This is what happens when you do that, So yeah, I mean, over time, this is going to continue to go down. We can already see a massive high here. This is going back to 86, obviously. A lower high here, a lower high here. So we are expecting a lower high, from already over here. I'm not really looking for this to overtake its pre-pandemic highs. We are looking for this to form another lower high, if not this one already has already been formed, and then obviously tail off over the years to come. So we're talking years to come. So all of those who talk about Bitcoin being the inflation hedge, and then you got these cheeky people in the middle saying, no, it's not. No, it's not. What are you talking about? No, it's not. Well, I mean, it is if you think about it. I mean, but just like our mate Michael Saylor says, I'm not a massive Michael Saylor fanboy, but it's worth recognizing what he says, which is that the best time to buy Bitcoin is always 5 years ago. And in that respect, that's true, and that should almost always be true. I believe that, because I mean, statistically, I mean, that has always been true. It doesn't matter where you bought it from, whether you bought it from that Damon's entry point over here, or you bought it, from generally me and my channels. I say me and my channels, but I created this channel when the bull market clearly began, which is around here. I thought, this will be fun. I'll do it. I'll do a YouTube channel, and we'll document the bull market really, and see where it goes. So yeah, I would be pretty confident in saying how long ago is this? So it's coming up for 5 years almost, isn't it? Really, if you think about it, it's 4 years, obviously. it's very unlikely for it to retrace all the way back down to these levels, you know, below 4,000. I mean, there's been some rocky times. Let's face it, the pandemic caused a rocky time all the way down to effectively my entry point, really, on a wick low, and that was after a period of, well, April the 1st was roughly when it all began. Pretty much a year later. So yeah, it is rocky, and you could argue that was a similar kind of situation to those who could have potentially bought the top 12 months ago around this peak. So where are we now? Okay, we're getting a wick low. So those people who bought that peak, 16% down at the moment, there was times when they were happy, times when they were sad, times when they were happy, sad, and then they're most likely going to be happy again, because the best time to buy Bitcoin is always 5 years ago. So it's not the end of the world. This is what Bitcoin does. And remember, you know, altcoins, we love them. They are amplifiers of Bitcoin's movement. That's what they're doing at the moment. They're amplifying the downtrend for Bitcoin. And it's worth recognizing that, you know, despite how devastated some of these altcoins are being right now, the Bitcoin dominance is only just trickling up now. It's, I mean, it's got bullish divergence on it. Let's face it. It's had that for almost a couple of weeks now. So it does look like it wants to go up now. Let's face it. There's bullish divergence on the weekly as well. It does look like it wants to go up. So this could get particularly nasty for altcoins, you know, as we speak. But as we all know that altcoins do amplify Bitcoin's moves. This chart has always been a little bit underwhelming in the way that it generally performs, and we generally as well have a fix on it, which is that the Bollinger Band strategy seems to work quite well on the weekly. And if we look at this, we've been rejected all the way from over here, where the alt season began in January, when alts were extremely wrecked. This is where we made lots of our money last year, simply just on trading altcoins, and it kept on going down and going down. But we were getting rejected on the centre of the Bollinger Band. Even when we hit rock bottom, we bounced up to the top of the Bollinger Band. We had a period of 2 weeks where we came above it, and then rejection, 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 and we've come up to it right now, which is rejection time. So what this would suggest is, when a temporary bottom for Bitcoin, which I think is pretty much now is formed, altcoins will have a really nice dead cat bounce, we'll call it. We'll call that a dead cat bounce for the moment. Because we're not looking for this to reverse anytime soon. I think rather than trying to get clever and spot the bottoms, it was like what I was saying on, I think it might have been yesterday or one of my more recent videos about you know, bear markets, which technically I still wouldn't call this a bear market, not in normal sense, the normal sense of the word, but I mean, it's going to be bearish until we recognize any at least signals on something like a longer term time frame, like a daily for instance, to tell us otherwise. And by coming down by these large incremental steps down, will only speed up the process of it turning round. So that is a good thing about this. So what we'll be looking for would be essentially a dead cat bounce for the moment, a bit of a relief rally, but certainly wouldn't be expecting any sharp recoveries at the moment. Similar to any vibe coming down at this level, we would be looking for some kind of divergence across the board, which is what we got from here. So this was 2014. We found a very low point here on the RSI, came up again to test the top of the range, came down, made a lower low with a higher low on the RSI, back up to the top of range, all the way back down, made a lower low with a higher low, all the way up to basically break the range, and continued on. Obviously, it got a little nasty after that because of the old Megatron virus when it first arrived. So we're going to be looking for the same thing over here. It's pretty much a standard practice really for looking for a major reversal at this point. There's no point in trying to call bottoms on this. I mean, we could argue that the CME gap, which is down here, could be getting filled, or it could have been front run already. We just don't know. One of my major top tier Patreons, you know, is basically an absolute hero at the moment, because he said that, you know, he's put a large order in at 35,500. He was talking to me about that at the weekend, and I was like, okay, that's cool, that's cool. You know, it might get filled, and now he is absolutely laughing because he's basically killed it. He's outperformed all of us. And to be honest with you, I mean, that's the best way to deal with something like this. We spoke just a second ago, or I spoke, talk about me like, you know, third person or as multiple people. I spoke a few minutes ago about what Mr. Saylor said. You know, the best time to buy Bitcoin is always 5 years ago. It's a very forgiving asset class, really, crypto, or maybe not altcoins, generally speaking. But Bitcoin itself is very forgiving. It spends much less time downtrending than it does uptrending. And the downtrends are definitely less aggressive than the uptrends. So, yeah, 5 years from now, even if you bought the top, you'll be laughing. But if you bought around these zones, I mean, it's not going to take 5 years for you to look back and go, wow, yeah, what a great call. I mean, this is basically what people have been asking for while it was all going all the way up here. I mean, people have been looking at this, you know, for the last 18 months, 2 years. What's my entry point? Where's my entry point? Where's my entry point? Well, now there's entry points being given to us left, right, and centre. You know, this was an entry point. This is an entry point. This area is an entry point. This is an entry point. These are all entry points. And look, if it keeps going down, you know, you incrementally put steps in and buy into these entry points. You know, it's no big deal. It's really no big deal. But me personally, at this stage right now, I would be looking for some divergence. We can try and play the chart for what it's worth, and like I say, I do expect a dead cat bounce right now, and from the bottom of this range to potentially the top, which is to test the 40,000 zone. You know, that's the obvious trade right now, and I'm not suggesting any of you use leverage or anything like that, because you know, me personally, even on the best of times, I don't go derivatives trading that much. I might do like 2 at best. Sort of big leverage trades in a month, and that would be enough for me. You know, that's enough. You know, that pays the bills and this, that, and the other. It's something that I have to be very confident on, and also have the time. You know, like I say, I've been up for hours. I've got 2 little kids, you know what I mean? It's madness around here. I can't sit around doing leverage trading. But when I get the opportunity, and when there's a very good fix, and the fix would generally have to be confirmed on a daily, because I use low leverage, so I like to get large percent increases generally on the chart. You know, I'm not using massive amounts of leverage. I need to really see some divergence form. So what we see here is a very similar kind of vibe to what we see over here. Parabolic, fast move up. And a well-deserved cooling off period below all major moving averages, and continuing down until people got shook the hell out. The only thing that gave us more confidence around here is that the bull market had only just begun, so the chances of this continuing over time is very likely. For those who believe in the 4-year cycle still, or you know, entertaining the prospect that this is going to be a prolonged bear market, then yeah, we don't have that kind of confidence at this stage. And also, well, actually, but you know, back here, this is just a normal market, right? This is before the world went crazy, right? This is before the Dixie was doing anything other than its normal thing, and so we didn't have all that worry about, you know, rate hikes and tapering, all this stuff. There was none of that. There was no pandemic. There was nothing. It was just a normal market traveling with its own free will. But now there are things outside of the chart, as you can see, with the Dixie here and the Nasdaq. The world appears to be correcting, and this is normal. This is kind of normal, right? I know it sounds bizarre, but it is normal. It's the new normal, should I say. So things aren't going to go down forever. This has been decided by the Fed to do this for, it's like the lesser of 2 evils. Okay, it won't be like this forever, but it is like this now. And so as the Dixie's broken down below this major area of support, you could consider this to be the same as the $40,000 zone for Bitcoin. We are going to have to approach another major level of horizontal, at least, which is all the way down here, which again, you know, from the candle body that we've closed on this weekly, it's another 5%. So you could make the case that Bitcoin, you know, next week will continue with its descent, but that doesn't mean it's going to descend even further from this, literally from this price. We're talking about a dead cat bounce forming at the moment to at least bring us up towards the top of the range, 40,000, maybe even this descending trend line. So we are talking about Bitcoin going back up by 15% before potentially coming back down again. So maybe we'll be looking at something like this and coming back down to our CME gap. And next week, I imagine, yeah, it's difficult to say exactly when, but I mean, this is happening pretty fast, but you're not going to go down forever. You will find bounces along the way. This is your first opportunity for a bounce. Traditional markets are closed. Obviously, it's the weekend. The weekends can do anything, really. They can do anything. But a bounce from this level is most likely. But the top side of the range would likely be the 40,000, and probably even front run because of the fear in the market. So we might even be talking about this wick low, which is about 39,500. So that could be the obvious trade for today. For me, I'm going to be at soft play with a bunch of kids, so there's no way for me to particularly try and take advantage of this. But I think that the opportunity for upside today specifically is quite high, and that would be high across the board. Given what we've seen with the Bitcoin dominance chart coming down to, well, I say bouncing up to this historic level of resistance on this massive year-long downtrend, I think altcoins are going to certainly feel they're going to bounce like a really big fat inflated cat, you know, if the market catches this as a dead cat bounce. But it would only be that, like I say, with the markets, all markets behaving the same way. There's no reason to suggest that Bitcoin is going to be immune from that, and we'd have to look at the traditional markets and legacy markets really to really recognise when this is going to come to an end. A lot of people were thinking that this could be it for the Nasdaq, but it certainly has got further to go. We can look back in time historically. You know, when things get really nasty, they come down to test the 20 weekly. Yeah, and no, the 200 weekly. Sorry, the 200 weekly does get tagged. Got tagged 18, sorry, 2020, obviously with the March Megatron dump. It happens. It happens. And if that were to happen, we can just measure that from the wick now, from the candle body that we closed at. That would be a further 25% on the Nasdaq. Now that is definitely possible. It's definitely possible. But I'll tell you what, I mean, looking at crypto and traditional markets, been saying for months now, get yourself a traditional market account. We've been making loads of money with crypto. Start topping up that account. You don't need to go into trades immediately, but the idea is, you know, shave your profit off on a monthly basis, put it in your bank, but then from that bank, take 10% of your profits that you make on a monthly basis. Take 10% of that, put it into a traditional market trading account, leave it there, and wait, because most of the time, especially if you're rather than just trading, I'm not talking about eToro, I'm talking about, you know, buying actual stocks and shares, you know, for something like IG or Free Trade is the one that I was talking about. Leave it in there, leave your money in there, and wait for the right moment. We used to look at all these different charts for stocks in the past, but I think people found it relatively boring because some of the times I was talking about things on a monthly basis. I was talking about charts on a monthly basis. I say, look, we're looking at a chart here. It said, I'm writing in month. IBM was a good example. We're talking about things on a month. Yeah, okay, we're like, oh, we'll look at this on the monthly and see where we go on the monthly. So, and I say, look, we leave things here and then you wait for the opportunity to go crazy. Turns out, you know, that this IBM actually did do quite well. I knew it was going to do well, but it's actually bounced pretty well. So this is a trade that we might have to continue waiting for. This has actually worked out pretty well. But I mean, this is what I'm talking about. You know, you do have to wait, especially if you're spot trading or trading with stocks and shares, not derivatives and things like that. That's for fast day traders that like to sit at their computers all day. So I've got 80% of my stocks and shares account sitting, waiting for further downside, and this is the sort of thing I'd be looking for. I would be looking for a massive correction on the Dixie, sorry, on Nasdaq and things like that, and then I'm going to pull the trigger. I've got to get ready for my daughter's birthday now, and I'm obviously too tired because I can't even distinguish between the Dixie and the Nasdaq. But you get the idea. So in summary, I'll be looking for a dead cat bounce around this level. The downtrend is going to continue to play out because legacy markets are continuing to play out because of the fundamentals on the Dixie have changed and the dollar's increasing in value due to the tapering. So yeah, traditional markets and everything's in a bear market, definitely, until proven otherwise. That's what we'll say for Bitcoin. We're in a bear market until proven otherwise, and I would be expecting this to have a dead cat bounce here, get rejected around 40,000, come down, fill the CME gap, probably have another thing around there. But until we start to get divergence, across the board, which is going to be formed on the RSI. This has happened on the last big pullback. Divergence here led to an uptrend. This happened over here. Divergence over here led to an uptrend. That's the main thing that we're going to be looking for. Divergence on the RSI on the daily, and no more, no less. That's what we're going to be looking for. The divergence on the daily is going to be the main trigger point for us to start to determine a potential bottom forming. And yet you could argue that this is step one of that, because it's a relatively oversold RSI. This is stage one of divergence forming. That's fine to say that. We are now lower than we were when we had that massive crash in May. So yeah, we could begin the divergence here. Certainly, there's no reason to suggest that we couldn't. But that means that yeah, the RSI has found a low, maybe its lowest point, but price action will have to come down lower in order for that divergence to form properly. Right, I'll leave it with you there. Thanks for watching, guys. Hope you have a nice day, and take it easy.